Wayne, let's get a sense from you. Up 1/4%. Gold prices was down. It was flat, but slightly to the negative, and now it's up again.
I don't know what.
Actually, I blink and I'm worried to actually read what's in front of me because it changes so rapidly.
It used to be that a day was a long day in markets. Now it takes me 15 minutes to drive here. 15 minutes is a long day in the market, because when I left the market till I got here, didn't think we were talking about the same market.
Wayne, 2 minutes is a long time in the market for me today, essentially.
I may be getting too old for this now, but yeah, look, the market's up. Obviously, look, to me, what you mentioned on the DAX early on is very important. This thing was being clubbed early on, and it actually has turned around.
But not as much.
Not quite to the same extent.
Okay, I'd like to go through some of the numbers. Well, I know we've had a slew of economic and, of course, corporate data this week, so tough to go through everything. What stuck out for you today? Here's the top 40 index. Tell me what you found interesting.
Look, I'm very interested to see that the banks, Standard Bank, Absa and that are quite near the top, and in fact the banking index is very, very strong. The platinum shares are still coming under a little bit of pressure. Amplat's right at the bottom. Maybe the shares are still too expensive, but I'm just happy that the market's sitting around that. This is another, the all-share index around about that 29,200 mark. And I'm just happy we didn't have any of these -4% during this week.
Exactly. I mean, BHP down 0.8%. Massmart spoke about it earlier, down 1 1/4. So still strong movements to the downside.
Look, I don't mind the market going down if there's bad economic news. But what we've seen in the last 3 weeks is just sheer unadulterated panic on bad economic news. You should only panic because of terrible economic news, and in fact the economic news is not terrible. So hopefully, I mean, markets can settle anywhere and discount any sort of valuations, but these 5% up and down movements in a day are quite frankly just panicking in and panicking out.
Well, Amplat's was at the bottom of the top 40, and Implat's gaining 1.8%, and we know, I mean, the news coming through there. Where do you find value in this very volatile? What are you doing?
Well, look,
you said you're getting too old. Are you sitting on your hands?
At 29,000 we actually see a bit of value. At 33 or 32,000 we didn't see much. But I mean, simplistically, and I've said this before, Anglo American and Billiton, these things are 7, 8 PEs. Now the earnings might be under threat, but they're only under threat if China collapses. But if China doesn't collapse, these are actually cheap shares. I mean, these are well diversified, certainly in Billiton's case, extremely well capitalized companies in a good sector of the market. If you believe China, that you're buying at 7, 8 PEs, this is not expensive. It's just fundamentally not expensive.
And what could make some of these stocks more attractive is, of course, a slightly weaker local currency. It was weaker this morning, and now it's slightly stronger against the US dollar. And hopefully someone who could shed some light as to where this rand is headed is André Eerenstein from RMB. So, André, I leave it to you. Tell me what is going on. We're stronger at this point. Last I checked, we were up around 0.8% against the US dollar. We're sitting at around 7.15, 7.18 to the greenback.
Yeah, it's still pretty much range bound. We're looking at a range of about 712 to 728, and I don't think that range is going to change. There's a lot of volatility around, and the markets are actually very thin at this point in time. So I think range bound it is until we see. If we see a serious risk-off environment, then the rand will tend to the top side, and we can actually see those 740, 750 levels.
Okay, do you think there's a massive chance that we could see a risk-off environment? I mean, Ben Bernanke perhaps allayed some fears. It seems that everyone's focusing on the fact that they are ready to act should it be required, and they've even extended the Fed meeting in September to 2 days. No,
that's true, but I think there's still inherent risks out there. We still haven't resolved any sort of issues in Europe. So there's potential for big issues coming out, and that's going to support the dollar going forward, particularly when the Fed is there really ready to act as and when they need to be.
Okay, tell us a little bit about the activity on the bond market. And we keep talking about the equity market, foreigners selling out, buying into bonds at this point. So still a bond market in South Africa looking quite attractive.
I think it looks very attractive, given the fact that we haven't seen the rand selling off, and we've seen equities being sold off. It's potential that there's a risk allocation happening. So essentially people are selling their equities and then going into the bond market. And that means the foreigners are still looking for yield, and they're getting it in the bond market. It's been a particularly volatile market in the bond, particularly long end bonds, where the foreigners have been very active.
In the long end of the curve.
Yeah, they tend to buy 10 years. And that's the front end of the curve is very driven by rate expectations.
Okay, so Wayne, tell me about your exposure to the bond market.
No, we are neutral exposure. Our bond market's not bad, and certainly in relation to the US bond market, our market looks extremely good. Inflationary pressures should abate over the next 6 months, simply because we've seen the oil price, that's, 110 is better than 120.
Yes.
But more importantly, the food prices globally seem to be easing off. So I don't think we're going to sit with massive inflationary issues, and you can still at least get a real yield in South Africa, whereas in the US you get a negative yield on bonds.
Exactly.
It just makes no sense to buy US bonds now.
Okay, so yeah.
I think when you look at it from a rate expectations element, I think the SARB will look through headline inflation and they will focus on core inflation.
We're still sitting at 4.3%, so in the middle of the target band.
Absolutely, but one has to look at the fact that wage expectations and wage growth is substantially higher than inflation, and I think that's a pure second round effect that the SARB will focus on going forward. And that's why we still maintain the view that there will be a hike. It's extended further out. Our RMB's
so no cuts on the table, would you say?
At this point in time, no. Our view is that we'll have a rate hike. That's due to happen in the second quarter of 2013. So rates remain flat through the whole of next year. And I think the risk is that that gets brought forward, particularly if we have good economic data that comes out of the US going into next year. I think their rates on hold for until 2013 view is at risk.
Okay, so very quickly, ranges for next week. If you're an exporter, have you missed out on the weakness? And if you're an importer, should you be taking advantage of the slight strength that we see in late trade today?
I think the exporter buyers has to look at it in terms of the high 20s. And I think, as I said earlier, my range is 712 to 728. Yeah. And I think importers should be looking to hedge around the bottom end of the range, and exporters should be looking at the top end of the range.
And how are you going into the weekend feeling, Wayne?
Look, I'm feeling a little bit better simply because it is the weekend. But look, I actually think we're going to struggle to keep the rand above 7. I think it's going to strengthen at some stage. There's just, despite no extra liquidity, there's still massive amount of liquidity around looking for a home.